There are 5 components you need to consistently be aware of and practice in order to trade highly volatile penny stocks successfully. These stocks come with a lot of risk, but they also give you tremendous rewards if you're able to manage your risk correctly. I'm going to show you 2 examples in this video where I took green trades because I followed these 5 components correctly. Number 1, is there any news on the stock? If there's good news pre-market, whether it's great earnings, an FDA approval, positive trial of a new drug, whatever the case may be, having a catalyst increases the probability of that penny stock gapping up further during the market open. But you don't just jump in, you look for a good entry, and that's where our other components will come into play, and we'll talk about that in a second. If there's not any news but the stock meets those other 4 components, it's still okay to trade, but just know your risk becomes higher. Ideally, you'd like to have all 5 components active, and not having news for why a stock is up increases your chances of losing money. Number 2, is the float lower than 10 million shares? A float is the number of shares available to the public. The lower the float, the lower the supply. And the lower the supply, the higher the demand. And low supply with high demand means a bigger move for the stock. If the float is above 10 million, it's not that it's a be-all, end-all scenario, but if we start getting above the 20 million shares or even higher, the move on these penny stocks probably won't be as significant. So try to look out for the ones under 10 million, and anything under 5 million is fantastic. Number 3, is the stock bouncing near a key standard deviation support level? I use these standard deviation levels on the 4-hour chart to map out my support and resistance. When I'm ready to trade, I use these levels on the shorter time frame to see if they're being respected. If they are, I get into the trade. And these levels, which I'm about to show you in a minute, are extremely reliable and I've used them for years. Number 4, is there a bullish case Fibonacci we can draw out that'll give us our entry and price target? You'll see in the example that I'll pull up, I draw a Fibonacci retracement for a penny stock that's gapping up pre-market that I think has potential to go higher. If that stock is respecting one of the key Fibonacci levels, I'll most likely get into that trade. Even more so, if there is a confluence with that Fibonacci level and the standard deviation support, my conviction in that entry is exponentially higher. And finally, number 5, is there a bearish case Fibonacci? If there is, that's something you want to avoid. If I'm looking at the pre-market and a stock has gone up so much and then suddenly it's made a move down, you want to make sure the pattern hasn't become bearish, because what it's going to do is retrace back up to a bearish Fibonacci level and possibly make a move down further. But it's best that I show you what I'm talking about. So let's switch over to the charts. So in this first example, we're going to talk about ticker symbol PRZO. What was the first component we talked about earlier? Is there news? And the answer was yes. PRZO was expanding its collaboration into the defense market with drones. So we had a catalyst for why the stock was gapping up pre-market. Secondly, how much was the float? The float, according to FinViz, was about 6 million shares, so that's pretty good for a stock of that size. Now, our third component was drawing out key support and resistance levels from our standard deviations on the 4-hour chart. So we're going to go ahead and ignore these last couple of candlesticks since the day is over and put ourselves back as if we were trading in the morning. So this candlestick right here represented the pre-market activity. So we're going to draw out key support and resistance levels trading around this price action. And here are my standard deviation levels I use on Thinkorswim if you want to copy them down. So let me start marking out these levels. And I'm also going to draw above this candlestick too, because we're bullish on the stock and we think it can potentially go to these standard deviations. So they basically become our resistance. Now let's switch over to the shorter time frame. I usually use the 5-minute and 2-minute chart, sometimes a 1-minute over here to do my trading. So our next component is drawing out a bullish Fibonacci retracement. And usually when it comes to these Fibonacci retracements, you want to draw from the pre-market low to the pre-market high. And you can see here, this candlestick closed above the 78.6% retracement, and eventually the stock started respecting the standard deviation support level as well. So in the moment, I drew out this trend line right here. And I got into the trade as soon as we were over it, which was right during the opening bell. I took some profit around the 0% retracement, which also correlated with the standard deviation resistance. And then I took the rest off as price action got closer to this 23.6% retracement. So all in all, a good trade. In the next example, we traded ticker symbol VS. Again, let's go through our components. Was there any news on this stock? Although there wasn't any direct news on the stock, it was part of a specific technology sector that was gapping up with all stocks in that sector, so it ultimately becomes a momentum play, but nonetheless something to be cognizant of. The second component, how high was the float? Not high at all. The float was 9.46 million shares, which was good. Now came the time to draw out our support and resistance, again, on our standard deviation levels. So this candlestick was a price action for the pre-market this morning. So I'm going to draw out levels around it and potentially higher of where the stock can go. So now that the levels are mapped out, let's switch over to the shorter time frame to draw out our Fibonacci retracement. And the Fibonacci we ended up drawing was from this low right here to this high, because when we drew it out, we saw that price action basically bounced off the 78.6% retracement and ultimately the standard deviation support. But I didn't get in right away because remember we talked about our fifth component. Is there a pattern in which we can draw out a bearish Fibonacci as well? And the answer is yes, if we go from this high to this low. So now I was waiting for us to break above this bearish 78.6% retracement level. I saw we did it here, but then we closed above it, we closed below it. But then when I saw this doji stick bouncing off this yellow halfway deviation and we retested the 78.6% retracement again, I got in and I rode the stock towards the 23.6% retracement price target for just over $400. So 2 successful trades this morning with a great setup and a setup that ultimately followed our 5 components. So that'll do it for this video. If you enjoy this content, please hit the like button and consider subscribing for more videos. But other than that, I hope you guys have a great day and good luck in the markets.